Welcome back. You're still tuned into Trading Hour. We are in the thick of the earnings season. So let's talk about another corporate, that's Mahindra Holidays and Resorts. This is the one on our radar. The company saw a subdued performance and a mild dip in domestic margin in what has been a seasonally weak quarter for the entire hospitality industry. Weakness in its European business has also weighed on the performance. But to discuss all of the numbers as well as what the road ahead looks like, we're joined by the company's MD and CEO, Kavinder Singh, on the show. Mr. Singh, good morning and thanks a lot for joining us. This is Pavitra. Now, I know that this is, a seasonally weak quarter. So let me ask you about how Q3 is shaping up. Take us through what the occupancy is looking like, because in Q2, you were at around 79%. If I remember correctly, you had said that Q3 could be above 85. So are you on track to do that?
Yeah, just to sort of correct this, misunderstanding that, in Q2 we did not have good occupancy. 79% is on an expanded base of 500 rooms that we had added during the last year. Our occupied room nights have gone up by 27%. We had our income growth by about 34% on YY basis, basically keeping the same quarter of the last year in mind. We have actually grown very significantly, and both our income, EBITDA, and PBT levels of the standalone business are the highest ever that we have achieved in our history. And most importantly, our income also grew by about 14%. And if you exclude the one-offs that we had last year because of the income tax refund, interest on income tax refund, as well as some lease rent waivers we had, our income actually grew by 19%. And the best part is that our margins are at about 28% EBITDA margins and 14% PBT margins. And these are 500 basis points up on pre-pandemic levels, by about 500 basis points up for the EBITDA and about 280 basis points for PBT compared to the pre-pandemic level. So all in all, this was a fantastic quarter for us, considering that typically it's a seasonally weak quarter. And yet we delivered fantastic numbers, as I just mentioned this to you.
Okay. Kavinder, now that things have opened up in a big way, I just want to understand whether there are new member additions, right? On an average for the last 2 years, despite COVID, despite the slowdown, you've been adding about 12,000 members annually. In the first half of the year, you did 8,200, so I'm sure you'll exceed that 12,000 number by the end of the year. But what's the guidance for perhaps FY24? On an average, what could it be?
So the best part for us has been that two questions, one question which was there in the previous one, which I will also answer. The October ended up with about 82.5% occupancy, and we are definitely looking to come closer to 84-85% occupancy. And this is going to be again seasonally. Of course, it's a good quarter. Again, it'll be the best quarter ever, at least as far as occupancy goes. And consequent impact on the resort incomes is also going to be seen. But coming back on the member additions, I think our member additions in this quarter were very robust at 4,400. And if you were to look at the running last quarters, we are already trending above 16,000 member additions in the running last 4 quarters. Obviously, this year we are going to cross the 12,000 number. We are noticing significant traction in the inquiries because people realize that vacation ownership in these times of inflation is a great deal, because when people pay up today, they don't have to pay for the 25 years or 15 years or 10 years of room rentals with us. And of course, they have to pay the annual fee, which is a small amount relative to the spiraling prices that you see in the leisure destination. So all in all, we are very confident of growing our member base, which is standing at about 275,000 members. And as I mentioned, the last 4 quarters on a running basis are at about 16,000 run right now.
Can you talk a bit about your European business, HCRO? How is it faring, and when do you think it will turn into the black on an operational basis?
So it has already turned in black. If you were to look at the numbers of HCR, which are the Finnish accounting standard numbers, they turned in an EBITDA of about 1.9 million euros, despite the situation which you have mentioned about the Russia-Ukraine war. The occupancy was at about 70%, which is higher than any other hotel or the hotel chain. And the most important thing is that if you were to exclude the one-offs that they got last year, which were government subsidies due to COVID, their actually performance is brilliant. 14% growth in income and 23% growth in EBITDA. And also at EBIT level, they are positive with about 0.3 million euros. So they have been positive. They are looking at future also with a lot of positivity because the Finnish travelers, domestic travel continues to be very strong. Our Sweden business also delivered a great performance, which is a subsidiary of the Finland business. And the Canaries business also did extremely well during this quarter. As you know, it's seasonally strong quarter for them. And despite the war, we did not see any impact. Of course, the input costs have gone up, but yet they delivered in terms of numbers, a very impressive set of numbers that we saw in this quarter too.
So talking about input costs and inflation, when the membership comes up for renewal, would you look to up your pricing, and if yes, by how much?
So typically our membership would renew after a very long periods of time because these are long tenure memberships. And whenever somebody wants to renew its membership, it will be the existing prevailing prices. But just to give you a sense as to what kind of price increases we have been taking on an annual basis, last year in 2 different tranches, we added up about 7 to 8% in terms of the membership fee. And our annual fee, because it's inflation linked, went up by about 7%.
Okay, Mr. Singh, on the inventory addition, if you can just take us through the plan there. I think currently you're around 4,700. You have said by FY25 you're going to get to 5,500. Could you tell us how much you're looking at in, say, this year in FY23?
So you can see that we are tracking well on inventory. We are definitely likely to exceed 5,500 mark. We have already hit 4,715. We added about 100 odd rooms, 116 rooms. We added 3 resorts. And therefore, we remain very optimistic about growth in our inventory, which will lead to, obviously, member additions growing stronger, which will lead to very high resort incomes. And the occupancies on an expanded inventory base. As I mentioned, we grew our occupied room nights by 27%. That would be another kicker that we will see as we move forward.
Okay, one final question very quickly. Will you look to demerge or separate your European vertical, your European arm?
At this moment of time, we are quite optimistic about the situation in Europe, despite the headwinds caused by the war, because the Finnish travel and the Swedish travel and people into Canaries are coming in because of the post-pandemic unlock. There is significant travel happening. Occupancies are good. So at this moment of time, we will remain focused on creating value, which is, there is an inherent value. As you know, this business had delivered a 12 million euro EBITDA 2-3 years ago, and then came COVID, and then we have this war. But we are very confident of delivering much better numbers than last year in this quarter, as I mentioned, in this year. As you know that even in this quarter, we delivered 1.9 million euro EBITDA positive, which shows that the business has the strength and the brand equity to take the business to the next level.
Mr. Singh, we'll leave it at that. Thank you very much for joining in. That's Mahindra Holidays for you. Get into a break. Up next, we'll discuss the way forward. We'll also put the spotlight on Piramal Pharma. Neil Bahal, the founder and CEO of Negin Capital PMS, joins in next.